Okay, so had a multiple offer situation yesterday that my client ended up losing, and I thought it was a really good opportunity to talk about what to do in multiple offer situations and what that kind of looks like from the listing agent's perspective. And this listing agent, Krista Jones, did an awesome job emailing over a summary of the offers that were received and kind of gives us a good look at what we can do to make sure that our offers are as competitive as possible. So just going to pull up that email summary from Krista here. So I really appreciate it when list agents do this and they kind of give you a summary of what the offers were that you were competing with. It really helps you educate your buyers on what they can do in the future to make sure that they're writing really compelling and strong offers. So in this situation, this was near Micron, which made it a particularly difficult property to get a hold of, and it was competitively priced. It was in a price range that a lot of people are trying to buy in. It was listed for 340, and then we don't know the sales price yet. It'll be interesting to see when it finally gets when it closes, and we can see what the sale price was. But it was quite a few offers were over asking. So there were 6 offers total, and there were 4 waived inspections. So something I tend to tell clients is in a multiple offer situation, it's very likely that at least someone is willing to waive the inspection. And so typically, the winning offer tends to be one that waived the inspection. So I'm not making a judgment about whether that's right or wrong or whether you should or shouldn't waive the inspection. I'm just describing the reality of the market, which is in a multiple offer situation, very likely the winning offer will have waived the inspection. So something I like to think about, when I'm buying for myself or representing clients is part of what you're buying is the house. Part of what you're buying also is the sellers. So as you're walking around and looking at the house, think about are these sellers that I have confidence in? Did they perform routine maintenance on the house? If the roof was leaking, would they have let that go or would they have repaired it? If there was water in the basement, if the furnace broke, things like that. Are these the types of people that you have confidence in that they've done routine maintenance on the home? So I always think about it. Part of it is you're buying the house. Part of it is you're buying the sellers. And that's usually what informs me for my comfort level if I'm willing to waive an inspection or not. So we also had all conventional loans. So as far as lending goes, and I'll do a separate video going over all the different types of loans, but cash is king. So there weren't any cash offers here, but cash offer always gives you the strongest chance to get a house at the most competitive price, and that is because a whole lot of deals that end up falling apart, not many deals do in this market environment, but the deals that do fall apart, the bank tends to be the reason why. So anytime you can get the bank out of a transaction, it makes everybody happy. Then the strongest type of loan that you could be offering is a conventional loan. So that just has the least number of hoops to jump through and the least number of things that can go wrong. So in this case, we were all conventional loans. Then the next thing is the appraisal gap addendum. So the idea here is, so let's just say the house was, the purchase price on the contract was $350,000. So if we have a $350,000 purchase price and then the appraisal comes back and it comes back for $345, now we have a gap between the appraised value of $345 and the sale price of $350. So when you have an appraisal gap addendum, what you are saying is that you will cover that difference in cash. So the bank is only going to loan up to $345, but then you're going to cover the additional $5,000 in cash. So the way this works, a lot of times, if you have a large down payment, all you're doing really is you're just moving money from your down payment. So instead of you paying the bank that $5,000, you're just paying it directly to the sellers. So let's say you had a $100,000 down payment, right? So you were borrowing $250 and you were putting $100 down, but instead it comes back at $345. So then instead of putting $100 down, you put $95 down. And then you give $5 directly to the seller, and you still have a loan off of $250. So appraisal gap addendums can be a way. So from the seller's perspective, they just have peace of mind that in the event that there's an appraisal gap, they're going to get the purchase price, not the appraised price. Now, I have not seen too many appraisal issues. Kind of since COVID, appraisers tend to understand that the market is increasing, and they generally have been good about getting at or above purchase price values, but it does give you a way to stand out amongst other offers if you are willing to cover that appraisal gap. Now, a lot of times I say an appraisal gap is largely academic more than it is practical, depending on the purchase price. Now, that can end up becoming very practical if if we're way above asking, or if we're, above where, similar comps are selling, that's where, if you're going to put an appraisal gap addendum in there, you do need to be prepared to cover that difference. So most of the time it doesn't end up being relevant, but sometimes it does. And if it does, you do need to be prepared to cover that gap. You can also cap your appraisal gap. So you could say, we'll cover the difference no matter what it is, or we could say, we'll cover the difference up to 5,000, up to 10,000, up to 20,000, and you just kind of pick a number that you're comfortable with. Then below that, we had one title transfer. So that is a contingency on a home sale, right? So there was one offer that was contingent on a home sale. Now, the home is already under contract, and so that's where Krista is saying that all that needs to happen is the deal needs to close and the title needs to get transferred. So that's what's called, in the actual contract, if you read the contract, it's pursuant to an existing contract. Right, so this is a home sale contingency pursuant to an existing contract, meaning the home is already under contract, versus one that, hey, we're going to get under contract on the house we're buying, and then we're going to put our house on the market. So that was traditionally, back right up until 2019, most houses had a home sale contingency. So I'm gonna buy your house, then I'm gonna put mine on the market. I'm going to find a buyer for my house is going to close, then I'm going to use those proceeds to buy your house. In this market, it is almost impossible to have a home sale contingency get accepted. Now, a title transfer, so a home sale contingency pursuant to an existing contract, is doable. Now, in this case, I don't know that this was the offer that was taken or whether it wasn't. I'm guessing it wasn't, just because there were so many strong offers. But that is what, if you put your house on the market first and then try to buy houses, that is doable. It's the one where you're saying, I'm going to put my house on the market once you accept my offer. That's the one that's almost impossible to get accepted. So if you are in a situation where you're not able, so you own a house currently, you're not able to treat them as two separate transactions, you're not able to buy a house and then sell yours independent of each other, the way to do it, the order of operations, is to actually get your house under contract first and make the sale of your house contingent on you finding suitable housing, right? So we would put in paragraph 26 of the buyer's contract that the sale of your house is contingent on you finding suitable housing. Now we've got your house under contract. Now we go and find you the house that you're going to buy, because having that title transfer pursuant to an existing contract is just a much easier way of getting an offer accepted than if you have to put your home on the market afterwards. And so we have four offers that were above 355. So the house was listed for 340. So 4 offers were very competitive. And sometimes agents will include how many escalation clauses there were. I'm guessing all 4 of those also had escalation clauses. So that just gives you an idea of the market in general. This is the type of situation we see constantly, where there's 6 offers, we've got 4 waived home inspections, we've got appraisal gap addendums, there's all these bells and whistles attached to these offers, and it's just more ways for you to differentiate yourself. Something that I don't see on here, which is another way that you can do it, is if you offer to accept the existing survey with an affidavit of no change. So the standard contract says that the sellers are going to pay for an updated survey. So a way that you can save them money without actually changing the purchase price, right? So they net more money on their sale, even though the purchase price is the same, is by accepting the existing survey with an affidavit of no change. Now, there's 2 catches here. One is they have to have the existing survey. I don't know about you, I'm not great with paperwork. In my existing survey, I'm not sure that I have it. Luckily, I have my attorney keep mine, so he's more organized than I am. That's great. But there's no guarantee the sellers have it. And then the other thing is there's no guarantee that there was no change, right? So if they added a shed or put up a fence or, subdivided the lot or anything like that, then this won't work. There's also they can only be so old before the lender is just going to require that it be updated. But a lot of houses on the market right now, people have only been living there for 3 to 5 years. And so, those, if you've got a 3-year-old survey, usually the lender is going to be okay with it. So you can say, as long as nothing has changed on it, we'll take the existing survey. That's a way that you can kind of save them $850. So they net $850 more without changing the purchase price or the other contingencies. And just really quick, one of the reasons that there are so many houses, there's really 2 demographics of houses that you see most often in this market. And one of them is estate sales. So we have, the homeowner lived in the house for however long, and now they've died. The heirs to their estate now own the home. Nobody needs to live there out of the heirs of the estate. And so, so they'll put it on the market to sell and then, disperse the sale price amongst the heirs. So that's one category that we see relatively often is just the estate sale, homeowner died, they're liquidating the house. And then the other one are people who have only lived in their house for 2, 3, 4 years. And that is because a lot of people who bought in 2019 to 2021 have what we call golden handcuffs as far as their interest rate. So if your interest rate got locked in at 2.5%, it really doesn't make sense to move unless you absolutely have to. Whereas if you bought in 2022 and your interest rate is at 6.5, 7.5%, then it's very easy to move from home to home because you're getting a like for like on your interest rate, or you may even get a better interest rate. I'm now seeing interest rates in the high fives, whereas for the longest time it was above 6, it was even above 7. They even touched the 8s there for a little bit. So that's why those two demographics of houses tend to pop up more than others. Is the estate sale, no one needs to live there, we have to sell the house, and then people who purchased their house relatively recently because they're able to do a like for like in terms of the interest rate, or even have a decrease in the interest rate, whereas people who bought 2019, 2018, 2020, 2021 have extremely low interest rates. It's very difficult to justify selling your house in that situation.